Hello guys, welcome to another backtesting video. Today I will be backtesting the 30th April 2024. It was a Tuesday, and if I show you the news, it was a backtesting video. So on Tuesday there was New York news on 6 and 7:30 p.m. Indian Standard Time. So on London session there was no sort of news. There was Euro news, but we don't trade Euro, we trade GBP. So our first priority is always GBP. And yeah, on Tuesday there was no news, and that is why I was looking for a trade. Even if there was news, I would have looking for trades. There is not anything special right there, but this is the lower highs, lower lows, higher lows, higher highs. And the market also has changed character on the daily, and the weekly bias was not clear. I mean, the weekly bias was bullish on both GBP and USD and DXY, but we trade the daily bias then. So obviously that video you will see on my weekly breakdown, why, how, when, where, everything we will be answered there. So please watch that video if you want that to be clear. And looking at how this Monday candle closed, it is a very bullish candle, as we can see. And after a bullish candle like this, it is very high probability that the next day also will continue. Maybe the week may be bearish. Even if the week is bearish, Monday, Tuesday can go up and then make the low of the week, right? This is the bearish weekly profiling, as we know. So we are pro trend traders, so obviously even if it's in a supply zone, it is not showing any sort of rejection. So that is why I was looking for buys again on Tuesday. And yeah, and obviously the opposite will be true for DXY. And on DXY I was looking for sells. If I show you my analysis, so DXY was not that clean, but you can see the market was bullish, higher high, and the market cannot go up forever, as we know. It has to make a pullback. So we are now trading the pullback on DXY, which is the higher low. So I was looking for sells. And also if I draw the Fibonacci retracement tool, whenever there is a change of character or something like that happens in the market, I draw out my Fibonacci to see the probable retracement. And the retracement, the yellow line represents the equilibrium, the red line represents the discounted, and the yellow line is the 61.8 level, 61.8% retracement level, and the zone between the yellow line and the red line is called discounted. The zone below the red line is called the OTE level, or also the discounted level, as we can see right here. And this is called the premium level right here. So yeah, that's what the Fibonacci retracement is. So this is when on Tuesday I was looking for sells on DXY and buys on GBP USD. So that is when, after knowing now I know my why I am taking my trade, I know it, right? So that is when I go to the lower time frames, like the 4-hourly. On the 4-hourly there was a change of character here. I don't know why I didn't mark this. There was, at Monday I was looking for some sort of sells because of this change of character, but it didn't play it out. So Monday I didn't trade higher highs, higher lows. Waiting for Monday gave me my bias for bullish, or for Tuesday, there was a change of character here. So I was looking for buys from this sort of demand zone. So obviously on the H1 there will be some sort of demand zone, I believe. Yes, on the H1 there it was a very, very clean demand zone. It was a trend continuation, beautiful trade. This huge buying pressure, huge buying volume came in from this zone, right? So this was a demand zone. A demand zone is a zone from where huge buying happens in the market. So also this demand zone was so clear because of the fair value gap, market structure shift, and also it was with the bias being bullish. So, and also this demand zone was formed after a huge amount of accumulation here. As we can see, we have learned a new thing. Whenever a zone forms after accumulation, after sweeping a lot of liquidity, it makes a move, that zone is more stronger. And this was exactly that, what I'm telling to you now. So we wait for the Asian range to close, obviously. So if I'm looking for something, it would be a buy from this demand zone right here, something like this, right? So this was what I was looking. And on DXY, the same sort of opposite thing would be true. And yeah, I was looking for sells from this sort of supply zone right here. I don't know why I didn't mark it, but I didn't. So it is a breakdown video. It is a trade breakdown. So obviously I will show you why, how, and this is where. The why is clear. Now this is the where. Now we have to figure out when. When will we enter the markets? So after I have seen an hourly rejection candlestick like this, I place a buy limit here with my stop loss being 8 pips. And yeah, I need a good entry. if the market goes without me, then it's no problem. But yeah, this is a double-edged sword. Sometimes it works, sometimes it doesn't, so it's very risky. Do it in your own risk. And yeah, that is what I was looking for, and the trade did play out. And I've also learned one more thing in this trade was, whenever DXY and GU are doing some sort of same things, and DXY bias is bullish whereas GU bias was bearish, and GU swept the previous week high early, it's a sign of a bearish week. It is a myth. It is a myth, but let's see if it's true or not. So I've just marked it, that's why. And whenever the bias is not clear, the weekly bias is not clear, and you are trading the daily bias, that is when you should follow your 1:3 risks to reward. Here you can see, after I got my 1:3 risks to reward, I bounced, right? I was not greedy. I was not targeting the previous day high or the Asian high. What I did, I got my 1:3, I bounced. And if I didn't bounce, I would have lost this trade. So it was a winner. But if I had not taken the precautions, it would have been a loser. So very, very beautiful trade, and got to learn a lot of things from this trade. So, and also I have backtested this trade if I want to come back and watch why I took this trade. So